Hello everyone, it's me the Boss Hog. Today I'd like to look at my buy, sells and lots of dividends, as you can see by the inspiration for the thumbnail this week. One of my best dividend weeks, and actually really satisfying to be using the dividend to average down on these shares. Anyway, more to talk about, so let's do it. Alright, so by the way, there's a lot going on in the Boss Hog household at the moment, so it might not be as slick as normal, but let's see what we can do. So, a pretty weird week. Honestly, undid about 80% of a pretty good week last week. It was quite calm until Thursday, and then I would describe it as a rout. It was panicky and etc. Friday definitely stabilized a little bit, but was still definitely under a little bit of pressure there. So, but like I say, having had a calm and then a pretty good finish to last week, I was actually quite zen. Felt fine with it. I added some capital after payday. As a result of that, we're back to running 20 days ahead in order to hit our ISA targets, so our tax efficient accounts, which is my minimum focus for saving across the year. So that's going well, basically. I do expect July to be under a little bit of pressure, which is why I was keen to catch up, because we have like a couple of 6 monthly and 3 monthly bills that are due in July, so we might not be able to put quite so much capital in, but running effectively a month ahead here. These are 20 working days as well, so not too much pressure on that front. No sales this week. This is only the second time since I started investing that I had no sales. It was really just because I feel increasingly comfortable with the layout of my portfolio, and I didn't really spot any opportunities, so I just decided not to fiddle around. So nothing sold. And then lastly, this was also really nice. So 5 dividends, all reinvested into the same company that I got them from. I have to say it was really satisfying averaging down, you know, like things like GAMA, AMKR, TROW. Like I really believe in these companies long term. So just being able to basically get free money that I could then buy shares on the cheap with actually made me feel really great. I would just say that Huntsman and DLR, I got these dividends really quickly by my brokerage's standards, but you know, they got paid out on I think the 1st. But they cleared my account at like 10 o'clock at night on a Friday, so I couldn't actually put them back in. That's also why you'll see a slight delta between my kind of capital plus bought, capital plus dividends equals bought. The delta there is my Huntsman and DLR dividend, but don't worry, because I'm planning on reinvesting those again back into the same companies next Tuesday when the American markets open again after Independence Day. So enjoy that, everyone who's in America, or indeed is American, will be celebrating. But let's have a look at what I bought next up anyway. Alright, so a few to talk about, but not too much time I'm going to spend on each one here. First up is Phoenix. At one stage I had 2,000 shares. Currently I have 1,000 again, having gone as low as 900. Basically, I'm selling these above 620 and buying them back under 600. My price target here remains 720. But also on the good side, by buying these shares, I qualify for the next dividend, which is expected to be about 25p in about 6 weeks' time. So although it's not exactly chasing the dividend, for me it's a nice to have, and basically gives me a slight discount on these shares. So I'm very happy picking up what I consider a very safe financial in the current market. Likewise here, I continue to add to my positions in Hollywood Bowl and Redrow. Hollywood Bowl is basically, in my opinion, best in class in terms of UK bowling alleys, but it also gets a lot of its revenue from food, arcade, etc., about 50% from non-bowling stuff, and also has now an international arm in Canada, as well as what they call putt stars, so a mini golf format in the UK as well. All very small compared to their core business, but to me I still think it's a good long-term play, and I still think this is trading too cheaply at the moment. So for me, anything under a 230 is a buy, and I'm picking these up at 209. So my average on this now is about 219, so I feel really good about that. It's a long-term hold for me. And Redrow is my house builder of choice in the UK. Again, it's a very unloved sector at the moment, but house prices continue to go up. Yeah, maybe slightly slower than they were before. I've also got a dividend coming up on this in the not too distant future as well. So again, another good chance for me to average down anything under £5. Next up, we've got Fever Tree. I haven't been big into Fever Tree. I currently have a fairly small position, about 80 shares or so, 75 maybe. Now, for me, Fever Tree isn't without risk at the moment. Part of the reason why it's fallen is because its margins are under pressure. Basically, as it expands internationally, it's being hit by sort of shipping in particular. It hasn't yet got its warehouses up and running in its new markets, and so on. However, I think for sort of 1260, this is a really great margin of safety, and there's a lot of upside here if they can execute their plans over the next few years. So not without risks. I think in some ways it's still a very immature company that needs to kind of grow into the multi-billion-pound organisation that it now is. But I'm a really big advocate of Ep40. I really like the product as well, and I almost want it to succeed. So yeah, for me, buying at this level is absolutely fine. And as said, there a little bit of background noise for everyone. Next up, we've got Micron. I now have quite a large position in Micron. I bought 3 shares before earnings just because I already considered it cheap. Earnings were interesting. I went on the earnings call, and I'll talk a bit more about them separately in this same video, though. So stay toward the end if you want my thoughts on Micron, because like I say, I went on the earnings call, and as a teaser, I will continue to be buying those, and you'll see why in a few minutes if you stick around. And last but not least on this list is DLR. I'm trying to buy my REITs at the moment. I only have MPW and DLR as my 2 REIT holdings, but I think I'm very happy with them both. I have a much smaller position in DLR compared to MPW, but picking up sort of the better part of 2 shares under $130 feels really good. Not exactly cheap. It still is 19 times on AFFO, so quite expensive by REIT standard, but it's also about 10% below its long-term average of about 21. So for me, it's a good opportunity to pick it up. I don't think it's exactly a discount, but I also think under 130 you get a pretty good return here on a much needed piece of infrastructure. So that's my thoughts there. That's my buys this week. I've already said on the sell, so we'll gloss straight over them. I won't even include them this week, and we'll have a look at my portfolio and more talk about Micron as well. Alright, so in terms of how my portfolio is looking, a few things highlighted in green here I just want to talk about a little bit more. Next, though, I have been doing some work in the background here and basically linking this up with Dividend Max, so to get some information on dividends. So first of all, I can now give future guidance. So I've started, well, I will be putting in my dividends for the current month, so in this case July, so you can see here when these are due to come in and when they'll be going. I can also now do ex-dividend as well, but there's nothing going ex-divi in my portfolio over the next week, but they will now be added by the week as well, so I'm quite excited about my integrating those points. That's all automatic as well, so that feels really good. And I guess then I'll start with Micron. So like I say, I have quite a large position in Micron now. It's definitely about 3% of my portfolio or so. But for me, I'm really bullish on Micron. I went onto the earnings call, and it was really interesting watching the out of hours trading for Micron. First of all, let's start with Q3, which I thought was actually pretty solid. Revenue more or less flat. It beat it, but very fractionally. EPS was a little bit ahead, but again, not a ton. So Q3 in line with expectations. But Q4 got huge downgrades from Micron themselves, who only set guidance 1 quarter in advance. But for me, I wasn't particularly worried about why that was, because in essence, the PC market and mobile market's really under a lot of pressure at the moment. People just don't have the money to be investing in PCs and mobiles, which means that the manufacturers just aren't requesting as many chips, right? But the reason why I'm in Micron is all about the data centers, and that's 50% year on year, and specifically the SSD in data centers is more than doubled in a year. So for me, Q4 I think is going to be a bit rough, but it's still very profitable. I also expect their Q1, which is 2023, so January, is still going to be impacting as well. Their plan to deal with this is basically to build inventory about 5 months worth and then release it when the market improves, as well as the fact that they're not going to be chasing margins. So they're going to be focusing on quality instead of quantity when it comes to margins, which I think was good, because in previous cycles, everyone's gone to the bottom and then they've had to sell more shares and etc. But Micron at the moment's got 12 billion on the balance sheet. Actually was very bullish about the fact that they're going to be increasing their buyback. They wouldn't commit to a number despite the fact that analysts were really keen on trying to get one, but you get the impression that several billion is going to be put aside for what they consider at the moment is a very low share price, trading well below its intrinsic value, so that would be interesting. And for me, assuming that there's some truth in the way that calendar year 2023 is going to shake out, then basically you've got 6 to 9 months where Micron's going to be under a little bit of pressure, and then you're going to be seeing greener pastures. And for me, depending on exactly what that looks like, I get a forward P of somewhere between about 5.5 in a really good scenario and about 8.5 in a less good scenario. And by less good, I mean if all the future quarters get marked down by the same as Q4. So that just to give you some some guidance there. But for me, as long as it is within that kind of range, I still consider Micron a really clear buy. Also as well, in terms of their free cash flow, the majority of it goes towards share buybacks instead of dividend, which for me as a British investor is much more efficient because I don't get any tax on capital growth basically, so that's fantastic. And yeah, broadly speaking, the reasons why I'm bullish about Micron were really positive, including future guidance. Yeah, they're under pressure on the PC and the mobile arm, but they've also got some promising stuff on like the automotive, on the industrial side, and so on, graphics as well. So for me, yeah, there was definitely some surprise about the Q4 level of markdown, but I am fine buying at these kind of levels, and indeed I will plan on continuing to be buying at these levels. I'm really happy with it. My average buy price is now in the $63, so I'm definitely red on this, but feel completely fine as a long-term hold basically. The other ones I want to talk about here are Games Workshop. So they put out a trading update just over a week ago. I would say it was pretty positive. You can still tell that their earnings are under a little bit of pressure, not unlike Fever Tree actually. This is all about warehousing, logistics, expansion, investments, etc. that are eating into that. But pleasingly for me, there was a huge increase in IP and what they call royalties, which was really great to see, as well as the fact that their core business is becoming increasingly profitable. So I was happy with the trading update, and I have to say, having this share price is almost halved at its lowest over the last year or so. It's now found its footing and is up about 20% from its lowest point. I still think it's relatively cheap compared to historic standards. It's forward P something like 16 and a bit. This is a company that not too long ago was trading on almost 30, which maybe was a little bit expensive, but still I consider it a screaming buy at the moment, and indeed I bought some a couple of weeks ago, so that felt really good. Their full earnings are in a month's time, and I will bring you those, and again I'm planning to go on any earnings call and review the presentation as well. Next up is MPW here, another company that was under a lot of pressure. Didn't fall anywhere near as much as Games Workshop, but for me, I'm really pleased with the fact that I was buying MPW when there was a lot of concern about it. And in fact, I got into a bit of a YouTube heated conversation with somebody about MPW, where I think the bear case here is really overdone. So for me, I've got quite a large position in this now, close to 5% of my portfolio, and it's now going to be really yielding nicely for the next every quarter. It's a really good dividend. I'm quite happy actually with my level and average for MPW at the moment, down about 3% on my capital position, but honestly I feel amazing with that, so great. DLR I've mostly already touched on. I don't think I want to spend too much time on it outside of, like I say, I consider it under 130. I'm really happy to be buying, and including adding more capital to it. Otherwise I'm just going to continue to enjoy the dividend and drip back into it. And I guess that's pretty much it, to be honest with you, having already spoken about Micron as well. So like I say, a very busy weekend for me, so I managed to squeeze this in. Any questions, I'll do my best to reply early next week. Thank you very much for watching, everyone. I've been the Boss Hog, and good luck for your investing. Bye for now.